The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. The first chart that we posted into Tiger TV today was the German DAX index. You can see the Gartley pattern that formed there on Friday. And then this morning, the market gapped up almost 200 points, which is equivalent of $10,000 in the S&P. But remember that the DAX has a margin of 20,000 euros. It went all the way up to complete the ABC of that pattern, up around 14,000. Let's try that. 11,480, and then we dropped another 200 points down, taking out the lows of the day, and has since rallied another 100 points since then. So it's had a 500-point round turn today in the DAX, which is equivalent to $25,000 in S&P points. So that's not for the faint of heart, but boy, if you're asking for swings, that's the one that is certainly there. The next chart that I posted is the chart of the gasoline futures with the crude oil overlaid on top of it. And as you can see, we're in a downtrend in that. We've made new lows now on these past 4 or 5 days here with the gasoline futures. We haven't quite done it yet with crude oil, but the gasoline had been the leader, and now it's giving up the ghost. We got a little support down here, about another 5 cents a gallon, around the 202 level in gasoline, so we'll keep an eye on that. But right now, the trend is certainly heading down towards that level. Now, there is a market that I watch very closely, and a lot of folks here at TFNN do, and that is the soybean market. And I wanted to bring that to your attention today because we had widespread rains across the growing season this year, across the growing area. And, oh dear, I did something wrong there. Hold on. I hit the wrong button. There, you see it on the just to give me a second here to get the right chart up, and then we'll be okay here. Okay, we had some really widespread rains across the Midwest, and should have alleviated some of this weather problem that they've been talking about. In fact, it is not. And beans didn't even sell off at all. They're up a couple of cents right now, and we've been up for 6 days in a row, which means we should get ready to correct. But this information of the weather and what's happening, I think, is important, because usually when you have a bear market like we're in, and we are in a bear market in beans, we think we've turned. But we've made lower highs in February, March, April, May. June is the first time that we've taken out a high of the previous few weeks. That was back at 927. So this is decidedly a bear market, but it has not turned decisively up yet. The reason why I'm bringing this to your attention is when bad news does not make a market go down, then be really careful of that market. So I would certainly love to see a correction here of about 25 cents in beans. In fact, I was thinking maybe over the weekend we could have that, with the news coming out. In fact, early Sunday night, I was talking to a bean processor in Illinois, and he told me, he said they weren't even taking any protection at all, because the demand for the beans that they had there in Martinsville, Illinois, was relatively strong. So the market didn't sell off. It's still up on the day. So we want to watch these soybeans for a correction, because I think they've got a long way to go if this pattern that we're looking at here, holds out. Since we're in the talking about the soybeans, I wanted to bring out something that Jim Twentyman and Dr. Ruth Miller worked on many years ago, and I just wanted to show you this. It's related to the stock market. It also works with the beans and some of the other things that we have. So give me 1 second here to get these up here, and I'll be able to show you what we're looking at, hopefully. Oh, no, I wanted to do one other thing first. And that is that one of our good friends here in Tiger TV, Mr. Marshall, sent me some information from Robert Prechter's letter. I don't usually watch Elliott Wave, but some of the studies that Bob Prechter puts in there are really quite informative. And the one that I wanted to post to show you today is to show you the one of going back to the 1870s and the number of times that the stock market has been above the trend for so many periods of time. Now, you notice here there's been over 150 years, there's only been 3 times where you've had these periods where they're extended over periods of time, and we're in one of those right now. So this is another reason to be careful. Folks, when I look at all these charts, they literally scares me to death because of the complacency that's out there. I mean, you know, we got this massive distribution of stocks going on, as we can see by the New York Stock Exchange Index. But the NASDAQ is still strong. You know, the IWM is still strong. I shorted that on Friday at 128. I shorted Goldman Sachs at 215. And, those are probably going to be up a little bit today, but the stops on those, I'm only going to risk 3% of the value, so that's $6 in each one of those. So if they get taken out, then I'll look at the next pattern. But these are patterns that I see unfolding. I have to do them because when they complete, they usually don't give you another chance if you're wrong or if you're right. So we want to watch it very, very closely. But this chart shows that we're at another really extended area like we've never been before. And another one that just is really scary is when you look at the margin debt is another one that is enough to scare you to death if you watch what's happened in the past and what's going on now. I want to put that up just to remind us because it's going to come around and bite us very soon, folks. It's all about credit. And it's all about the bond market, and it's all about loans and stuff. It's not so much about stocks. The stock market is going to pull it along with it, but it's going to be about debt. I don't know if it's going to be about Greece or what's happening there. I mean, they're not going to be able to pay their money back. I mean, give me a break. I mean, where are they going to get the income from to pay all these debts back? You know, they basically got their creditors between a rock and a hard place. They know that they don't want to take them out of the euro zone, so they literally can play games with them, and they're playing games, and that's what they're doing. And they're going to raise the maximum retirement age to 67, I think, from 58 or whatever it was. And whether that's going to help them enough on that side, I don't know. But they've got deep problems, and I don't think borrowing more money from the IMF or from the Eurobank is going to make a lot of difference. But that's neither here nor there. We had a really spectacular run in stocks last night after closing really badly on Friday. We completed that Gartley pattern in the New York Stock Exchange Index that we've been talking about for quite some time. I need to put that in here to let you folks look at it because it has got a possibility here of being a really important pattern because this is the first major ABCD correction that we've had since May 18th. And it looks like if we take out the highs of Friday, which will be above 11,150, then this probably means that this Gartley has failed. And it's going to go up to the 786 would be my guess. The NASDAQ has not made new highs on the Qs, which are the smaller, the 100, but the NASDAQ larger one has made new highs above 2,000, which has to be considered positive. And we've had a new high made in the IBB, which looks like it's going to go to 400. And we also have a new highs being made in the IWM, but that one is making a very significant top from looking at all the patterns. It is spot on to be ready to go down here. Now, whether it's going to do that or not, we don't know, but it's got a lot of things to tell us up here at this 128 level that it's going to be pretty tough. Now, what I did was, at the difference between 128, you'll notice that the 1.618 expansion up here at the top line there on the far right side, you'll see all the patterns complete, and above that is the 1.618 expansion line of that whole move from February, and that comes in at 130.23. So we could easily hit 130.23, and this could still be a bearish pattern. That's why you use a stop of around 3% in this, so that would keep you above. Your stop would be about 131.5, so you'd have a little bit of leeway there. But using a stop like that and something that's trading for 127 is certainly acceptable. That's what you're looking at here. But boy, it's got a lot of things to say that it's ready to turn down here. But the market is very jittery because of the Greek thing, and that's basically because of what the people at the Bloomberg and CNBC and BBC and all these other people, they beat the drum, and once the drum starts to beat, the Indians start heading towards the exits, and that's what usually happens. So this is what we're watching early this morning. We've got some pretty good strength in the market, and we'll see if it continues on in the first hour or two. As you recall, Friday the market was up, and then it rolled over, closed right on its bottom, and it looked like it was ready to gap down. And Sunday night, with the Greek thing going, the market opened 10 points higher in the S&P and didn't look back, and which proceeds maybe higher highs again today, and this Gartley pattern will fail, and then we'll have to look at something else. Gold is still selling off quite a bit. We got up to that 1204 level, which was the 61% retracement of the previous high back at 1234. That was a perfect Gartley. But what's interesting this time, folks, is that silver is holding up a little bit better. It's not selling off nearly as much as the gold is. It's still selling off, but it's holding up much, much better, which could lead to some further strength in gold. But we need gold to stay above the 1170 level, because if we don't do that, this thing has really got some, legs to the downside. So that's a key thing to be watching in the gold market, as far as I see from the technical standpoint. The U.S. dollar is trying to make a stand in here, but frankly, it's all based on what happens with the Greeks. I'll put up the dollar index for this, and you'll see that we are very, very close to retesting that 61% retracement from back in December. That's a whole yearly retracement, and that's equivalent to 114 in the euro, folks. If we get the euro much above 114, we got to 114.03 today, which was a 786 retracement of the high we made back on Fed Day, which was last week, and we made 78% exactly to the tick in the pound. We made it exactly to the tick in the euro versus the dollar. So that tells us that those numbers, from a geometric standpoint, are very, very important. But if we get the euro above 114 now, because we had a 100 pip retracement from that level this morning, that tells us that we're going to go a lot higher. In fact, if it happens, it could happen in a heartbeat. Okay, we'll be back after these few words.
Larry Pesavento has just announced a new service that is designed specifically for technical traders that follow Fibonacci patterns in many markets and are always on the lookout for profitable trade setups. Larry will be sending his subscribers a constant stream of charts and videos whenever he finds formations and trade setups in the market you need to know about. And each Monday morning you'll receive Larry's written report that provides detailed commentary on the charts and videos that he sent out, as well as what to expect for the week of trading ahead. Larry's first issue will be delivered this coming Monday, and in the days remaining, we're offering a special launch promotion where you can get a full month of Larry's new service, Fibonacci 24/7, for only $47 with a 30-day money-back guarantee. Larry has already started sending out charts and videos to his subscribers that have signed up, so don't delay and sign up now. You can sign up for Larry Pesavento's Fibonacci 24/7 right now by visiting the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I've posted into Tiger TV the chart for gold on the daily basis, and as you can see, I've overlaid the chart of silver on the in the dark blue line, as you can see it on the chart there. We've had that 135 rising bottoms line. The gold, as you can see, rallied up and made a perfect Gartley up there at the 1.6 at this 0.618 retracement at 1204.90. We're now down about $17 from that level, and there's a possibility that that's the C leg of an ABCD leg, and that's going to take us below 1145, and that's not going to be good. That's the bottom line. Silver is held up relatively well. It's down a bit on the day, but it's still heading down as near as I can tell. Folks, it's really hard to find anything out there that's bullish in the futures markets, with the exception of the bulls. That's a bullish chart. If you're looking for bulls in the stock market, that is a bullish chart. But the futures markets, it doesn't make any difference. Even beans that have termed a little bit are still, lagging badly. They're in a basically a downtrend. So there's a chance for some deflation, coming in here, and that's the one thing that the central banks fear the most. And that's why they have this quantitative easing, and I believe quantitative easing is not going to be the solution. It's going to be the problem, because it's just increased credit to the point where we've gone to the extremes like we've never seen in history, and that's what scares me the most. And the fact that the complacency that's there in the market there's a lot of air in these things that could really bring a lot of things down. What I'm recommending to my friends is to buy the September puts, something out of the money, like a 2100 put in the S&P September. That's about 15 points out of the money. Probably not going to. It's going to cost you a little bit, but it's going to give you some protection, and it gives you plenty of time for something to happen. And this is the first day of summer. It's our longest day of the year. And folks, if you go out tonight and look up into the sky with the moon up there, you'll see the crescent moon, and on both sides of the crescent moon, you'll see two bright stars. One of them, the smaller one, is Venus, and the other one is Jupiter, and they're making a scalene triangle. It means the opposite, all sides are not equal, but that's a trine that's there between Venus and Jupiter. That's a very important aspect from stocks and bonds and gold. It affects a lot of different things. But with the solstice, the summer solstice here, and that particular thing, you should take a look at it tonight, because the family was watching it last night, and it was really cool to see it. We had binoculars, and it was really nice to see how it looks. But it's basically a trine between the moon and the Venus and Jupiter. And so it's a pretty big one, to look at. So keep an eye on that tonight if you get a chance, and get a little bit of astronomy in with the family. It's always a little bit of fun. Now, we don't have the full moon coming until the right before the holiday, which is next week. We've got the market closed on the Friday, July 3rd. And that's going to be right around full moon time. So that's the weekend that I'm really expecting, fireworks. Oh boy, was that a Freudian slip or what? But something big is getting ready to happen, folks. There's too much complacency out here. And I don't know, maybe I'm just too old now to look at this stuff. But boy, I'm looking at these patterns, and I'm looking at all the stuff that's out there with these extremes that we're at. And boy, this market is stretched like a rubber band. And there's very few people that are, there's a few people out there, but there's very few people that are really scared. And I happen to be one of those people. So just see what happens. We'll have to wait and see what the markets are going to bring us. We're going to be opening here pretty soon with a big gusto, like we always do, and I don't understand why people won't buy it when it's 100 points lower, but when it's 150 points higher, they have to buy it. I guess that's the history of buying and selling, but I certainly wouldn't buy a big gap up opening today. That doesn't make any sense to me at all, especially when it's based on a perceived deal with the Greeks, and I'm not even sure that's the case. But markets will do what they will. Markets are seldom wrong. Men are often wrong. So those are the key things to keep in mind for the day. All right, we got a little bit more time here before the break, and then we got another break coming. After we come back from the break, I want to look at the Treasury bonds and Treasury notes. I want to keep on that, and I'm going to talk a little bit about George Baer, the astrologer, who was a good friend of W.D. Gann and Jesse Livermore, who traded out of a beautiful private rail car in Chicago during the 30s and 40s and 50s. We'll be talking about that. I happened to be fortunate enough to meet his daughter, and I wanted to go through and see what's going on with that. So we'll be back right after these few words and the sharply higher opening in the stock market.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I wanted to go through a little history. We'll let these people do all their buying this morning here in the stocks, then we'll see where we are, how we're going to take out that high in the New York Stock Exchange Index on Friday. But I wanted to talk a little bit about George Baer. Baer was one of the folks that really spent a lot of time with astrology stuff. He wrote several books. And I was fortunate enough to be living in California, and George Baer's daughter was living in a nursing home in Pebble Beach, and one of my very, very good friends owns a pharmacy in Carmel, which is right next to Pebble Beach. And one day we were just having dinner or lunch, I forget what it was, and I mentioned that there was a guy that lived up in this area years ago, back in the 30s and 40s, named George Baer. And he says, well, I've got a patient in the one of my nursing homes here that I service, and her name is Baer, and I believe her name is Georgia. or Georgianne, something like that. It was a derivative off of that. And so I asked him, I said, well, how is she? She's in pretty good shape. So he called her and asked her, and he said, yes. She said, that was my father. Jim Twentyman and I got in the car. We left Pismo Beach about 7:30 in the morning one Saturday. 2 hours later, we were at the nursing home there in Pebble Beach. I was actually right outside of Pebble Beach in Carmel, and no one can have a nursing home in Pebble Beach. It's too expensive. But anyway, it was a really nice place, and so we talked to her. She was really pretty good. She was in her 80s, doing well, but she brought out a really neat box of old pictures of stuff of the rail car that her father had traded out of. He had a ticker tape in it. You should have seen. I really wanted these pictures, and she said she was going to give them to me when she passed away, but I never did get them. No, she didn't leave much as far as physical stuff, of course. I don't know anything about her estate. All I know is that it was all covered by a trust fund that was set up by her father. She was able to live comfortably without ever having to work. But some of the pictures that were in there were really fantastic. There was pictures of Jesse Livermore and W.D. Gann and Arthur Cotton. I mean, it was really something to see some of these people that you'd seen and heard about, and to see that this man actually lived and went through this stuff. But his rail car was really fantastic. It was built by the Pullman Car Company in 1928 out of Chicago. I don't know whatever happened to it, but the chart that I've posted in here is one of the things that Jim Twentyman works on, and that is using the speed of Mercury, because Mercury is the planet that's closest to the sun and it's the one that's based on communication. And when it goes back and forth, it swings, and sometimes it looks like retrograde. But Baer found that the speed of Mercury was very important in calculating when markets would change. And you'll see here on those red dots that are here, there's some pretty good hits in here. Now, just like anything else in astrology, there ain't nothing that's going to hit all the time. You can forget about that. That's just not going to occur. But what you want to be watching is when these occur. Now, we got a big one coming up. Using this material here that we just talked about will be coming in on July 2nd. That's the day before we go on the holiday for our 4th of July holiday. Remember, holidays have a tendency to be up about 70% of the time the day before. Now, that didn't happen during Memorial Day. Whether it's going to happen during the 4th of July, we'll have to wait and see. But we really want to key on July 2nd, because not only do we have this Mercury speeding position difference, but we'll have into, we should be able to see what's going to happen. Should be happening, what's happening with the markets at that time. It'd be quite interesting, I believe, because a lot of things are happening on that time of July the 2nd. And we want to watch that very closely. We had that same type of configuration back on September the 3rd, 1929. We had a big change in the speed of Mercury at that time, and it was very important that the markets made that high and didn't see that high again for 37 years. And we'll see what's going to be the case here with some of these things. We're having a lot of buying right now in the markets. Last night the S&P hit 2118. The old high was 2119. A little bit of a sell-off right now, but that's the people that want to buy this stuff early in the morning. I just don't understand why people go in and buy these really big swings here in the morning, pay up for it. Well, I know why. It's not their money. That's the reason. There's no question about it. Now, I wanted to switch over to the foreign exchange markets now, just for a second, because we had a big move up and down in the euro last night. We went up right around 1 o'clock in the morning, New York time. We hit the exact 786 of the high from last Thursday, June 18th. That was the Fed time, and then the market broke down this morning, and it stopped exactly to the tick to the 786 retracement of the low from June 19th, and the high that we made so far today after that low was made, you'll never guess, boys and girls, it was exactly 786. So 786 has been ruling the euro for the last 3 or 4 days in here. And if you trade currencies, you really need to focus on that 786 number when you're dealing with the euro. You know, I only look at 4 numbers actually. You know, 618 and 786 are my contracting numbers, and 1.27 and 1.618 are my expanding numbers. But pay attention to this chart on the euro, because if we get above 114.10, there is nothing but air above this thing. I mean, the old high is 114.35, but it won't mean anything in my opinion. I think it could break through, and you could be looking at 116 easily in the euro. Whether that's related to the Greek problem or scenario that's going on or not, I'm not really sure. All I know is just pay really close attention to that if you get above it, because you certainly can't be bearish if you're you know, doing that during that time. Now, I wanted to give just I know we talked a little bit about the crude oil when we were on the air to start off with, when I was looking at with natural gas, but I wanted to bring this up because John Logan had a really good comment about it, and I wanted you to see you know, these numbers that we have here in crude, because we're starting to move to the downside here the last few days. We've mentioned that we've had some declining tops, and we've mentioned that, you know, the leader had been the gasoline, and the leader of the pack gave up its ghost. And as you can see, over the past 4 days, we've had lower highs coming in the crude oil. Now we're starting to accelerate to the downside, and should we get below that 58.50 level, we could easily get down into the 5600 again level to see it. But we're starting to hear people now talk about the fact that this oil market bear is over, and you know, that it's not going to go down anymore and all that kind of stuff. And that's the fundamental stuff that I have such a difficult time with. But neither here nor there. That's what you have to live with, because that's what people are talking about. So that's what you really want to look at. Now, let's switch over to the bond market here. We've only got, wow, the time goes so fast when you're having fun. Give me a second here to get the bonds up, because this is the one that really trades nicely off Fibonacci numbers. It's just, it's sort of a, I guess it would, what you would call it would be a roadmap of Fibonacci, because it does, well, it's so big. I mean, it's the second largest of all the commodity things we trade, notes being the first, bonds being second. You'll notice that we have this 1, 2, 3, 4, 5 expanding triangle happening. Now, we made our low back at 147 after we broke from 157. We broke 10 handles, $10,000. A 60% retracement back on 10 handles is 6 handles, so that takes you to 153. And if you'll notice, the circle at the top of the page there is where the 153 comes in. That would complete that pattern. Now, this morning's low, after the big emotional thing that was going on in Greece, was exactly 61% of the retracement of the low that we made on the 18th, on Thursday, which was the Fed day. The market has since rallied up to the 61% retracement of the previous day's high, up at 151.20, and is now dropped back to 150.20. So it's had a move just from Sunday night of 2 points down, 2 points up, 1 point down. So we've had a 5-point swing in Treasury bonds. So this market is rocking and rolling, folks. You got to pay attention to it, because it has some huge swings intraday as it prepares to make that final assault that should come in up at that 150, 153 level. As a matter of fact, if we just complete the pattern that has just happened over the last few hours, you'll be able to see that it would be a beautiful 3-drive pattern just coming in spot on at that level. So that's what you'd be watching if you're watching the Treasury bonds. We should hold the 149.47. That's the 786 of that previous move. But frankly, I think this 150 level is going to hold it. That's what it looks like from the cheap seats here, and we'll see if that's going to be the case or not. Now, I wanted to check the IWM to see how badly they're whacking me today. Hold on just a second here, and we'll take a look. Okay, I'm in at 128, and it's trading at 175. Well, it's not done very much at all. It made a higher high, but that's nothing. It's only out 39 cents, so that's still in the ballpark of where I think we could be. So it's get a little just early in the morning, but we'll look at this pattern again, and you can see it's in the ballpark here. I really thought that Friday's action in the markets with the close the way that it did, that it was ready to gap down, but the Greek thing, evidently, whatever that Greek thing is, I'm not even sure. But you'll see here, we're looking at it's trading at 128.46. So that's not too much happening with that. So, one of the questions that someone has, of course, is about our favorite stock in the world, which is Apple Computer. And I see where one of the rock and roll icons, Taylor Swift, said that she didn't like what Apple was doing, and Apple buckled under and started to pay her. So I think it's great that finally Apple did something altruistic to everyone. I think that's terrific. But since she controlled the album, I don't think they had a whole lot of things to go on with it. So anyway, it looks to me like Apple is heading down. I mean, we've got lower tops here. Give me 1 second. There we go. We have lower tops in Apple ever since May 18th. We rallied up to the 61% retracement exactly to 129 or 130.20, which was a perfect 61% retracement. We came down, made a double bottom, and then for the last 4 days, we've rallied, but not very much. We've only rallied back to 50% of that last high on the 8th of June. It's actually become a weaker than market stock now, given some of the other stocks, that are out there. So those are the things that I think are relatively important. If Apple gets above 131, then all bets are off, of course. But right now the trend is down. In fact, it's actually down a little bit today, with the market really strong. So we'll see what's going on with that. So the next thing I wanted to check here this morning is the New York Stock Exchange Index. We've been open about 15 minutes, which is not enough to open all the stocks. But let's just see how many are open and see if we've busted through the high. Woohoo, boy, we're really close to it, folks. Looks like we're getting ready to go here pretty swift. So let's just look here. Now we're going to go through the high, I would think, as we gapped up so much, and none of these stocks have opened. A lot of these stocks have not opened yet. So we're leaving another gap in here. We're almost there. I can see my beeper is on. So that means that this Gartley that I'm looking at is highly suspect, and we might be going a bit higher. But that's hasn't done it yet. But boy, it's not very far away. It's holy dear. It's only $4 out of 11,133. So I'm looking at 11,137, and we're at 11,133, and that beeper is going to go off probably as I'm speaking. So we'll see what's going to happen with it, and we'll go from that level. Okay, now. One other question. So, we got almost coming up to the break again. The next question, of course, is about Priceline, and we'll see how Priceline is doing here. That had been a weaker than market stock, and we'll see if it continues to do that. Yep, it sure is. It still seems to be heading to the downside, coming off of that downtrend line that we had a few weeks ago. In fact, it gapped down today, which is sort of strange given the fact it was it's much weaker than the market, and it gapped down today. We're getting down to that support near that gap area, which is $1,000 or $1,100. So we're $50 away on that, and so we'll see. Now, Priceline left. You should see this pattern, folks, because we mentioned it before. Haven't talked about it in quite some while, but the pattern that we had in Priceline left an island reversal, as you can see here at the red box that I've marked in there. That's basically a weekly reversal where everything that people bought for that previous week, the market gaps down. Let me double check this because I don't trust this data. Yep, the data is good, and the market gapped down quite a bit. And that's really a strong island reversal that tells this stock does want to go lower. So that's what we're keeping an eye on here with this. I think we're coming up to the break now. When we come back, we're going to review where we stand, and we'll go from there as soon as the break comes. And there it is. Okay, there's.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I've posted the New York Stock Exchange Index chart in the room again, and Steve Rhodes brought this to my attention. The last time we made this 61% retracement back on the 8th of June, this was the signal where we're watching the planet Mercury going into direct motion, and that was the completion of the ABCD. That completed a Gartley at that point, and what I was looking at was the Gartley that's completing, that we just had, that completed this morning. Now, we took out Friday's high by 1 point. Out of 11,137, it went to 11,138. Whether that's going to mean anything or not, I'm not really sure, but this is a Gartley sell pattern. You had a Gartley buy pattern on the 8th, and now you had a Gartley sell signal coming in here on the 22nd. We have the solstice, which is pretty powerful in itself. And so whether this, and we also had that Venus trine Jupiter that I mentioned for you to look at tonight if you go out and see the moon. The two little stars that are out there, the big one is Jupiter, the smaller one is Venus, and it's making a scalene triangle, which means the sides are unequal, and that's why it comes up with a trine. It's one of the major aspects that you look at. Trines are usually bullish. The markets are pulled up into trines and squares, and they are pulled down into conjunctions and oppositions. So these are just some of the things that Dr. Miller taught me when I was learning to do astrology. And boy, believe me, you talk about a complex subject, this is it. So I try to do just little bits and pieces to put it together and, show you some of the things that are out there. But to find the exact one is certainly very, very difficult to do. So you want to just take it along with you, use your own signals, and just use it as as sort of a guideline or an information tool is what I would be looking at it from that point of view. So we've had a pretty good jump around here in the stock index futures. They went from 21.17 down to 21.12 and then back to 21.17. So they're still jockeying in position here. We should have some pretty good resistance up with the 21.22. Should we get up there? The old high was 21.19. But I don't believe we're going to get to 21.35 in the S&P, but I certainly could be wrong. So that's it. We'll wrap it up today. Live every day in an attitude of gratitude, and may God bless, and do something nice for someone who has a lot less than you today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.